Greetings, members, one and all of the Salivation Nation. Looks like the precious metals are barely holding on to those two magical numbers that we saw earlier this week. $1,500 gold and $17 silver. Let's take a look and see what's going on here as we explore the markets for Friday, August the 9th. Silver futures settled 1.5% lower on Thursday, according to this article here from MarketWatch. Gold settled lower Thursday after rallying along with silver to multi-year highs a day ago. However, investors remain on edge over trade relations between the U.S. and China, with the conflict serving as a key longer-term support for a climb in precious metals. December gold rose 0.02% on the COMEX. It declined $10.10 to $1,509.50 an ounce after marking the highest level for the precious metal since 2013 based off most active contracts according to Dow Jones market data. Meanwhile, September silver was up 0.2%. It gave up 26 cents or 1.5% to finish at $16.93 an ounce, following the metal's sharpest one-day gain on points basis since September the 6th, 2016 and July 2016 on a percentage basis, according to FactSet data. However, gold holding above the psychologically important $1,500 was seen as a sign that the uptrend remains firmly intact for the precious metals, amid anxieties about the health of the global economy. International trade clashes between two of the world's biggest superpowers. China-U.S. trade tensions softened somewhat early Thursday after the People's Bank of China set its daily reference rate for the onshore yuan at the weakest level since April 21st, 2008. But the currency fixing at 7.0039 per dollar was a slightly weaker level than had been expected, helping to calm some worries that Beijing would use its currency to engage in more aggressive trade clash with the U.S. I'll stop right there and say that it's quite telling that, and it's really no secret, that China, and Trump knows this, is holding out until election year or the election itself. It's quite fascinating to see, how diligent and what China is willing to do in spite their economy being weaker than ours. And who knows? I think with what's going on, it could hurt our economy. The economy is fragile, which is why I'm nervous with what's going on here and where things could go, because any one of these things, especially if things can go like they did the other day, with China devaluing their currency so much that the markets reacted so negatively, down hundreds and hundreds of points. The markets actually ended down at the end of the day today, as opposed to after rebounding somewhat. And so with that being said, people are nervous. The markets are nervous. There's a lot going on. We also have Brexit we have to take into consideration. There's not been much word about that for a while, even though it's, in a sense, become more tumultuous with Boris Johnson at the helm now as Prime Minister of the United Kingdom. There's fear of getting out with no deal that could cause some panic. However, I do think, the people voted for it. It might be the best way, but we'll see how that plays out. But nonetheless, it's the fear of the unknown and the fear of what could be, of what people fear the most. And that's just it. We operate in fear. That's what these markets do. And, of course, gold and silver react accordingly. And so I think the new normal now, at least until Election Day, will be an unsettled deal with China in terms of trade. Moving ahead here, metals have mostly benefited from weakness in equity markets as investors eschew assets perceived as risky in favor of those considered safe havens like gold and sovereign debt. Consequently, a slide in government debt to ultra-low And negative rates has also helped to buttress bullion and silver, which don't bear a coupon but tend to rally in times of uncertainty. Well, that's right. They don't pay dividends. Gold and silver, they are there essentially as insurance policies, and most of us would not see insurance as a financial investment. And really, that's really the bottom line here, because that word is so loosely used nowadays. I should probably preface it by saying a financial investment. And in terms of how gold and silver should be seen, make no mistake, it doesn't mean that people can't make money off the metals, and they have, and they've done trading in such a way, in that terms, they can use them in their as investment vehicles. But the metals themselves, I believe, holding them and just acquiring them and holding them provide a better value if they're seen as a hedge and insurance policy for sure. Risk appetite resurfaced yesterday, Thursday, drawing demand away from gold, with the Dow Jones Industrial Average is up 0.34% and the S&P up 0.66%, both enjoying gains of at least 1% in afternoon trade. Here's the 10-year Treasury notes, up 1.45% yield after yield falls steadily on Thursday, rising to around 1.718% from 1.675%. Represented its lowest level since October 2016. The brisk climb for metals has stoked some worries that commodities may be vulnerable to more severe pullback if the U.S. dollar remains elevated. For example, a reconciliation signal between President Donald Trump and China could send investors back to riskier assets. I don't think we're going to see that. There may be talks of some promise and some movements here, but I think probably the markets will be wise to it. And they'll probably, I believe, they'll stay up relatively high. The article goes on. The situation has become risky for Trump, too, so we cannot exclude this scenario. Moreover, the area of 1500 to 1530 was, between 2011 and 2013, an interesting support area, and there are good chances that could represent a resistance level now. And I believe the rise in gold prices really, in a sense, are more different than they were in 2011, because a lot of that was because of the bottleneck in supply, just like with gold and bullion. But there may be some renewed visits to that based off of some other information I received. Possibly more on that later in a separate video. Platinum lost $3.50 according to this article here. And palladium is edged to $3.20 to settle at $14.13. Let's take a look now at the metals prices and kind of where we're going here. See the bid price is below $17 for silver. So when you have these two above a certain resistance level, I think that's where we're going to be. So we're holding at $17 right now. Gold is now, as of just momentarily here now, back dipped below that $1,500 level. So, and it's been teetering back and forth between those two levels here. So we're kind of on that edge, and we'll see how it plays out. I think it's interesting to see because I think those two numbers are very solid numbers to that once the metals get there, we're probably going to see them stay there up for a while. And they've been teetering back and forth, which means it could go either way because of the psychological resistance level. One thing that hasn't changed a whole lot, even with these climbing prices, and even though yesterday I posted a video about Eagle sales increasing up this year from last year, is the gold to silver ratio. It's still pretty wide right now. And how long will this continue? I believe we could see it stay here or go up higher if the prices go down. And if the prices go up, it still may stay for quite a while, or for a while at least, while they while there's some figuring out what's going on in the paper markets and in the physical markets. I believe that once the physical markets really start to catch up, and we're seeing it to a degree with Silver Eagles, then we may see that ratio tighten up a bit. As people are buying silver. Why do people buy silver bullion? Well, because they believe it is a hedge, just like gold is. So we shall see. So post your thoughts below. A very interesting days. We've seen an interesting week for sure that we've witnessed here in terms of the precious metal prices and the movements therein and the ratio and what's going on here. We see here that this is playing out and these numbers have settled in and for the weekend. So it'll be very interesting to see what happens on Sunday at 6 o'clock Eastern time when the markets open back up again. One thing's for sure, through this, we will continue to hold our precious metals. We know that gold and silver provide a level of protection financially that we don't see in other asset classes out there. And I think that we can rejoice in times like these when the metals go up because they're doing what they're supposed to do to protect us. However, there are many of us, and I've seen it in the comment sections of prior videos, of those who are frustrated when you're wanting to buy. And I'm in that camp to a degree. I made a purchase, which was a hard pill to swallow, but it's a coin that I've wanted to as a collector. But also, one thing you realize that when you do buy silver and gold as a collector, you know that you're protecting yourself by the intrinsic value of the metal contained therein as a stacker as well. Now, obviously, those premiums, depending on what those premiums are, may not bear witness down the road when it comes time to sell. But part of that collector is understanding what those premiums are and understanding that you may lose those premiums when it comes time to sell. However, you're better protected, I believe, in gold when you purchase a higher premium piece because typically, unless it's a very rare collectible, does the price on a percentage basis go up that much more than it would silver. For instance, with silver, a collectible piece that you may buy, it would not be unheard of for it to have to be double spot price. However, for gold, it would be hard pressed to find something to be 20% a premium on a newer modern piece, and even some of the vintage pieces, you might be hard pressed to find one with that kind of premium, 25 to 50% tops maybe. There are rare exceptions, obviously, to any of those, but for the large part, the collector market in gold, you're paying less of a premium on a percentage-wise than many of these silver pieces out there. So there you have it. We'll stay tuned. We will see what happens in the coming week here with gold and silver. The numbers teeter back and forth, and we'll see. The markets could move either way. I don't even want to predict at this point. However, there have been some who have commented on my videos, two in particular, who say that, yeah, this is going to continue, especially with gold. Gold is going to continue to go up. They're not quite as sure about silver, but I believe silver will climb. I believe we'll probably see the ratio at least stay here where it is at 88. But it's anybody's guess. We shall see, and we'll move on, press forward ahead. All we can do is just accumulate when we can and ride it out. So I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.